the Rockland Finance Committee meeting. It's February 2nd, 2022. And in attendance, we have members of the Finance Committee: Julie, Carrie, Kara, Lori, Bill, Linda, Joe. Joe is not in yet. Susan is here. Megan and Bob are currently not present. We also have Doug, Biz, and Serena on from the town to represent the town in today's meeting. So just a note to the audience, this is, I guess it's a recorded meeting. It will be available on WRPS. Minutes from today's meeting will be available, posted at the clerk's office and online as well. So with that being said, let me just jump right into our agenda. Computer wants to do all kinds of fun stuff. So pretty straightforward. We'll talk about some liaison meetings. Lori had sent over some notes that she had from some meetings she had. I'll check in with anybody else to see if they have any notes from any conversations they've had. Biz will go over the free cash certification, and between Biz, Doug, and Serena, we'll talk about next steps for the accountant's position as Biz moves on, which none of us are happy about, but we do wish you the best of luck in the future, Biz, with whichever direction you decide to go.
Very much.
And you both, it does. So again, we appreciate everything that you've done.
Miss you, Biz.
So in any case, that's what our meeting looks like tonight. Yeah, thank you, Biz. So with that, why don't we start off with, we'll probably end with, we'll take things kind of a little bit in reverse order here. We'll start with free cash certification. So Biz, do you want to go over what you had sent over to me? I did forward it over to the team, but can you go over a little bit of the genesis of how the free cash is generated and what it looks like this year and kind of what drove that number?
Absolutely. If you could stop sharing your screen, I will share with you the free cash analysis. And with the free cash, it tends to be a little bit of a process. Let's see. Make sure I have that one up. And these are just some of the things that we have to do as town accountants to get certified with the Department of Revenue. Okay, can you see my screen?
Yes.
Yep. Okay, is it big enough for all of you?
If I get close enough.
Yeah, I know, I gotta get close to it. I think I'm gonna grow it a little bit.
There you go.
Okay.
Yeah, that's much better.
Okay, I'm gonna drop the faces down. Okay, this is a process that happens with the DOR, the town's books. It's long and involved. So what we start out with is what's called our undesignated fund balance at the end of June 30, 20. As we start out 21, this is our beginning balance. This right here, we have to add back into our balance. These are reserved for encumbrances. This is money that we had to put aside to pay for expenditures. This is the free cash allocations that we took from FY20, that part of our allocations that we hadn't spent yet. Reserve for petty cash, which is standard. Reserve for debt payments. Several years ago when the town entered into debt, the town was paid amortization. So on that amortization, over the course of each year that the amortization schedule's out there, you can write out a portion of that and help pay down the debt. So that was the balance at that point in time in 20. Then this is special articles that we continue to have at that point in time. So you have to close the prior year balances. So the prior year balance was $2,830,000 that we closed from opening fiscal year 21, which gave us the $6,333,000, which you see here. Then we had to account for the current year reserves for encumbrances, which are bills that we have to pay. Excuse me, reserve for expenditures, which were items that we voted for the FY '22 budget that we voted in May to use for capital projects. Continuing appropriations, that's capital projects that are already in process that we haven't closed yet. Petty cash remains the same, that never changes. During 20, we closed out $100,000 of overlay, which was funding that was used in 20 to help fund that budget. So we get to take that money back, or take that money out, I'm sorry. And this is our current reserve for debt payment. So you have the 6,033,000. And then you take all these pretty figures right here. And coincidentally, that equals 28,032,000. So there's only a difference of 2,000 there. So then you add in your revenues. These are considered revenues. So you add that back in, which adds to positive free cash. And then you deduct out your expenses, which is a reduction for free cash. One of the things I want to explain to you is the revenue closeouts. I can get into it more in depth as we go a little bit further. It's not as though we had super duper money come in. It had to do with different aspects of money for sale of foreclosed property. We had 530,000 come in for cannabis revenue. We had various tax title revenues come in the amount of $717,000. So all of those varying numbers help to create that revenue. And here, this is just an audit calculation having to do with deferred revenue. This is not that it's a standard entry, but when your receivables don't balance, you do your audit adjustments in and out of your undesignated fund balance. So this gave us a pure, it's called a pure or a proof of $5,992,000 to start our free cash calculations. So that's part one. Part two, this is called the balance sheet checklist. I kind of closed all your faces down because I can't see you guys. So let me just go through this, and then I'll bring up your faces again, and then we can go over any questions you may have, okay? Because I'm sure some of this you're saying, what is she talking about? So estimated local receipts. These are our motor vehicle tax, our meals tax, the cannabis tax, building permits, etc. So we brought in 1.5 million above what we had estimated. But again, as I previously explained, a lot of that money, 530 of that came from the cannabis revenue. We had roughly 700,000 in unbudgeted revenue because you can't budget for it, having to do with tax title payments that came in. So that's where the bulk of that money came from. And then the deferred revenue, it's not in accounts receivable per se, adjustment like you would think of in the normal sense from an accounting standpoint. Deferred revenue is an offset to your accounts receivable as required by Mass General Law. So that put an extra $180,000 in the coffers. Now, one of the things here is, this is our estimated cherry sheet revenue. We estimated 18,047,000. We only brought in 17,477,000. So we received essentially $569,000 less in the estimated revenue from the cherry sheet than what we had anticipated. So that reduces your revenue. Now, here's the big bulk of the revenue as well, because we transferred money from the stabilization fund at 500,000. We had overlay surplus at 200,000 and the OPEB trust fund at 250,000. So those figures alone, just take the 750 for the two trust funds, that added to that additional revenue. And everything here, this is called a balance sheet checklist that I have to prove to the DOR where our money comes from. Okay. Get back up here a little bit. Now, also here, I don't have my second screen up, so sorry, I'm kind of going back and forth. Part of our process during the year as well was we put money back into the stabilization fund of 100,000, back into the OPEB trust of 55,000. So that's a reduction. This right here is the most significant amount, and that is the unencumbered, unexpended. What that is budgetary turnbacks. So if we had articles we didn't use and we were not going to use them, going forward, we close them. Any departments who did not use all the funding, we closed those out. So in essence, for all the town projects, town budgets, the town turned back 2,230,000, and out of the 2,244,000, the school turned back roughly 14,209. Now, part of the reason our turnbacks were so high was the money that we received from CARES Act. The town side, we were able to charge $742,000 to the CARES Act. So that's money that we didn't have to spend on the budgeting side for the town. And we did not spend that additional funding. We left it alone so that it could help close out to our free cash, because we were not sure what was going to happen with this year. This budgeting year for 21 was pretty tricky. This was our first budgeting year as a team. So it was an adventure. We robbed Peter to pay Paul, and in the end, we have money that has to go back to Peter from Paul when we get down to brass tacks and we finish this all up. This was our free cash that was certified in 2020, July 1st. This is all the money that we had voted out. On the previous page, you saw the 1,162,000, which was reserved for expenditures. So we spent all but $259,000 of the previous year's free cash. Okay. And this is why I had cautioned you before to save free cash. Don't spend every penny. This $100,000.
Biz, does that include your accountant holdback?
Yes, it does. That essentially, the $259,000 is the accountant holdback, because when we were doing free cash last year, we had to shuffle things around. So without that accountant's holdback, there would have been nothing. Okay, so it's very important to maintain that holdback because it helps build your free cash for the future. Now, let's say we had a problem and our revenues didn't come in and we had a revenue deficit, but we still spent all our money. We would be in a negative free cash balance. You never want to go into a negative free cash balance because that doesn't show that you're paying attention to your books. Okay, very important that you hold back. Okay, there are communities that end up in a deficit, not because they want to, but because something happened. You had an extraordinary expense, or COVID hit for a lot of communities. A lot of communities suffered with the COVID. We did the right thing by conservative budgeting. So here again, the unappropriate overlay surplus that we were allowed to put back into our fund balance. So if you add up all those numbers, that gets us back to that beginning balance of the 5,000,009 whatever. So let me just get down here for a second. I want to see if I can get your faces back. Hold on. All right, I don't think I'm going to be able to get your faces back till I stop share. So anyway, this is where the 5,992 came into play. And then this is another section of the formula that you have to do. And everything we do is vetted by the Department of Revenue. We can't prove it. It doesn't exist. So this is what you deduct: personal property tax, real estate tax, receivables. And then you have offsets, which are deductions, which are based on deficits in the accounts. So here we had a variance with the treasurer for the accounts receivable of $14,000. It's not unusual, but it is something that has to be dealt with. And this has to do with, he is treasurer, but it's actually collector. And this also has to do with variance on liens. It could be a timing issue, could be something was posted into the wrong year. And these all reduced our free cash. If everything was perfect and we had no reductions and deductions and all that, our free cash would have been higher. $48,000, that's a school department fund balance that's been carrying for a number of years. We need to clear that up, and you'll see that I have that on the free cash going forward to get rid of that. Chapter 90, we were hit on the free cash for chapter 90 for $282,000. That's based on timing issue with filing. Anything here that you see in a deficit, if we clear these up, it will help go to next year's free cash certification, but any deficits that you have next year will reduce it. This Puerto Rico hurricane relief, that's been outstanding since before I arrived. This is something that needs to be cleared up. That was funding that the town took on children from Puerto Rico and helped educate them. So there was a grant given to the town for $10,638. We put the expenses in one fund. When the revenue came in, the revenue went into the school budget. So that created that deficit there. A small $3 deficit, no big deal. These items here, which have to do with payroll deductions, it's timing issue. No big deal. It's part of the process. So here we had $352,000 in deficits that reduced our free cash. Then you have to add back in a net deferred revenue, which gave us $4,565,826. So that is how we get to free cash. Let's see if I can get your faces back.
Sorry, I was a little late, Julie. I'm here.
I'm going to stop share for the moment. Okay, there you guys are. So that's how you get to free cash. I know I just threw an awful lot of information at you. I can bring up the screen again. I used to be able to see your faces when I explained this stuff, so I couldn't really see anybody's face. So do we have questions? Would you like me to go through that again?
No.
Please don't.
No. Well, I only had one
So other
question.
than Julie being tortured, does anybody else have any questions?
What was the $40,000 deficit?
The $40,000 deficit, hold on one second.
You don't have to pull it back up. It was for
No,
something
I'm
to
just
do
gonna
with.
look at it myself. Oh, that's health insurance. It's timing issue at the year end. If your payroll is cut on such and such a day, but your transfer doesn't happen to the next day, your book shows a deficit. Strictly timing.
Just seems kind of high. That's all. All right.
Yep,
Thank you.
no, that's, yeah, it is a little bit high. I'm not gonna say it's not. Auditing the withholdings each month is something that's gonna be happening and has been happening since October. So keeping on top of the insurances and payroll withholdings.
So, Biz, the big ones that I pulled out were tax title for $717,000, the marijuana revenue for $533,000, and then local receipts came in at 1,518, 146 over what was estimated.
Correct.
Some of which is pre-planned in advance because we never budget up to our actual full expected local receipts or just revenues in general. We don't budget right up to that.
If you take out the 700,000 for the non-budgeted items that we just talked about, that brings you down to 800,000. Then you take out the 530,000 for the cannabis, which was new revenue, that brings you down to 300,000. Okay, so, and again, if you don't go conservative on your revenue budgets, and there's certain rules you have to follow with the DOR, which we explained last year. If you don't go conservative on your revenue budgets, you can create a bigger problem on the go forward, because if you overestimate your revenue, you don't get it in, you have a revenue deficit. And if you don't have turnbacks that exceed your revenue deficits, you'll start your free cash with a deficit.
Yeah, that was the other one I had down, was the turnback related to things that we charge for COVID, 742,000. So, you know, all things aside, you know, these one-time things, one-time very odd things that happened in this particular calendar year, it looks like there's close to a couple $1 million tied up in out of the 4.5. that's tied
on
up,
If
one-off,
some of the COVID stuff did not occur, the free cash would have been more like 2.4.
Yeah.
Versus 4.6.
all right. All right, well, that was good information. Anybody have any questions for Biz on how she kind of came up with the free cash certification, how that was approved by the Department of Revenue?
What was
I'm
that,
sorry.
the $282,000 reduction to free cash in in that last chart you showed us? The
The
chapter
200
90?
Oh, okay. Chapter 90 is the funding that we get from the state. It's grant funding. And what has to happen so it doesn't hit your deficits is by June 30, you want to have all your grant reimbursement requests sent in. At a maximum, the last date that they can be filed is on September 30. And the highway department did not file they did a lot of work. I'm not going to say if they didn't. They did an awful lot of work to get a lot of stuff filed for, but they didn't complete their filings by September 30. And this is something that we worked on last year with them. It was much better this year than it was the previous year. We went over this again with the superintendent of highway on what they need to do to make sure that it doesn't have an impact. If we have a partial job, we file for partial reimbursement. You can't wait for a total project to be complete because you don't have the cash to pay for it, is what it's telling us. So that's why you want to file for partial reimbursements, just like any other large grants, like the MSBA. If we didn't go in and request payments every month, well, we'd be sitting there with a $50 million deficit on the book. So you just want to make sure that you're regularly applying for your grant reimbursements.
Thank you.
You're welcome.
All right,
So
that was good.
we'll never get that grant money, right?
Yes, you will for the chapter
Well,
90.
okay.
Yes, they have to file for it. And once they file for it and we get the funding for it, anything that's in deficit today, as long as we make up that deficit or get paid for that deficit, it goes away. So the 391,000 in total of deficits that you see today, next year may be 120,000 because all the work was done to make sure that the grants were reimbursed before we got the revenues in. It's a long process because between July 1st and September 30th, there are certain revenues that if you get in, it will not impact your free cash. But if you don't have those revenues in a timely fashion, then it impacts your free cash. And this is part of the reporting process to the DOR. Any deficit we have, I have to prove the date that we received the funding, how much funding we received, and what the outstanding fund balance is. So it's there's probably like 50, 60 pages worth of information just on fund balances. And then they get every single balance sheet for every single fund for the town in order to do the certifications. So there's 237 fund balances or balance sheets that were submitted this year on behalf of the town, as well as all the backup data. So
Are you saying
Hey,
we
look,
lost out on, I'm sorry, are you saying we lost out on some chapter 90 money because they didn't file by September 30th?
no, we will
Okay.
get paid that, we will get paid that money. However, because we didn't file by September 30, it shows a deficit. So next year, if we file for every single penny in a timely fashion for chapter 90, it wouldn't show a deficit, it'd be zero. So it's just ensuring that we file in a timely fashion, like every other grant. With federal education grants, school grants, if they stay outstanding for a period of time, you have to fund those somehow. Rockland's been really good about that. We did a lot of account cleanup in the last couple of years. There's only two that we have to deal with right now. And the biggest one is Puerto Rico. And I do have a solution for that, which I've gone over with Mr. Lab, as far as what you can do at town meeting to correct that and make that go away. Any more questions on that? Is that making sense?
Yeah, that makes a lot of sense. I didn't see sewer and water receipts mentioned in there, and I know that those come in a little bit differently.
Right. There is no sewer and water retained earnings at this point in time because they became an enterprise fund. They're enterprise funds effective for fiscal year 22. So what they are still working under is the undesignated fund balance from 2021. So when it gets to town meeting vote, there's specific things that the town will have to do in order for them to fund their projects. They will have to be voted in 2022 under the premise of undesignated fund balance, of which I'll be providing a sample article to Mr. Lapp. And these all have to go in for the special town meeting. They cannot go into the annual. If they go into the annual, then the DOI will not accept them. Okay, so specific instructions on that. The undesignated fund balance right now for the water department is roughly $1.1 million. They are in a good position to do some of the capital projects that they've requested. And they will also be putting money into their capital stabilization fund. And it will leave money on the table, just like with the town. They will have retained earnings to help fund their undesignated fund balance that will help fund their retained earnings for July 1st, 2022. Now, I think the biggest question is going to be the sewer department. The sewer department has $1,100,000 worth of projects that they'd like to do. However, their undesignated fund balance right now is $539,000, of which, based on previous losses, I do not recommend any capital projects, and this is my recommendation. I will no longer be here, so what the town chooses to do, it's up to them. No capital projects for the sewer department because they have run historically a revenue deficit of over $262,000 last year. So they have no money. So out of that $262,000, subtract that from the 539, that leaves you what? Roughly not even $300,000 to close out the year. That's if they go as it's been going. So that's significant for those two. As you get into fiscal year 22, that's when you will see what's called retained earnings.
Biz, just a question on sewer. You talk about their structural deficit. Now they've addressed that, have they not, with rate increases to get back up? So that shouldn't be a problem going forward. At the same time, they've got some leadership issues. They've got some board issues. Got to believe there's enough instability there that we shouldn't be throwing an extra $500,000 at them.
No, you don't have the ability to throw them any money.
Okay.
They're self-funded. They will have to be self-funded on their own because of the rate increase in the structural deficit. That came in for half of a fiscal year. And that half of a fiscal year rate increase, the way things are going, I'm concerned that they may not have a net profit, so to speak, for 22, because it came in so late in the game. What the approach is right now, as of January 1st, was to reduce any potential deficit and keep it so that it can contain itself. If it doesn't contain itself and it goes into a full deficit, then it has to be raised on the recap through taxation. That's not what you want to do.
Is there any
You
way
have to keep them.
I know that, is there any way to use any of the free cash to close
No.
that, or it has to come back on the recap?
Nope, goes back on the recap. It's a separate entity. It's like you've got the bowling alley, but Lucy's is a separate division of the bowling alley. If Lucy's loses money as a subdivision of the bowling alley has to pay for it. So it's like a losing enterprise. It's a losing enterprise is what it is. So that's why you have to be extra cautious And like I said, it's up to you what you want to do, but that's my recommendations for the sewer department. As it is, their budget and the revenues are going to be very, very tight for 23. Okay. So.
Biz, can I just
that's
jump in on that? Can-
Yes,
I just
sir.
wanted to add one point to this. Obviously, I agree with everything Biz said. We did discuss with the Board of Selectmen last night some potential uses of the federal ARPA funding. And so we are going to be pursuing using some ARPA funds for a water project to help the Joint Waterworks deal with PFAS remediation, and also to help the sewer department with a digester boiler repair. So while I agree with Biz 100%, they don't have the funding to do any capital projects on their own. But given the urgent nature of what they need to do at the sewer plant, and we have the ARPA funding available, and that's an allowable use, we're going to start by applying for that. We haven't physically done it yet, but we're going to, it's in the works, and we're going to request that through Plymouth County.
Right, and that's, just, I hate this terminology, but just to be clear, that's a totally separate funding source. So it's not impactful of their budgets.
What was the name of that funding, Doug?
Yeah, it's ARPA, the American Rescue Plan Act. So it's federal funds. That's the money from the federal government. I only brought it up now because Biz is right. It's not town funds, it's federal funds. I only brought it up because there were, you might hear discussion about the funding to get this project done. And so you might say, well, I thought we said we weren't doing any sewer capital projects, and that's because it's with these federal ARPA funds.
So an example of that might be like filters or something like that they would want to buy to, for the use of the plant to clean water and
Right. Yeah, for on the water side, yeah.
Okay.
And on the sewer side, it's called a digester boiler. Okay.
Yep.
So PFAS for water, digester for sewer.
Okay. Any other questions on free cash? All right. The net is that, it's all, we've got this free cash out there. The town has this free cash out there. And now we're going to wait to see how the plan kind of unfolds with, how the town intends to or would prefer to spend that free cash. So
I say don't spend any of it, but who asked me? No.
yeah, right. There you go. I'm sure that'll go over well. But I think there are some places for it that could help us in the long run. But I'm always a fan of putting money to work for you, or putting money aside for just in case. So hopefully we'll have that as part of the plan. I'm sure we will.
Can I just make one comment to that point, John?
Yep.
I just wanted to add that, maybe at one of your upcoming meetings, probably your next meeting, I'll give you a preliminary draft of what we're thinking. And I just have kind of 2 points to that. One is, we borrowed money from the stabilization fund, earlier to balance the budget, and then for the McCarthy farm. So certainly number one on our list is repaying the stabilization fund, as we talked about before. And I know that's important to the finance committee. The also point I wanted to make is, the timing is really fortunate. As Biz said, this is a really unusual free cash certification. We're not going to get this number again next year or the year after, but the timing is lucky because there are a couple of huge capital requests that are critical that we fund. And I was really sweating how we were going to be able to do it. And so the timing looks like it's really good. So I'll have more details for you at your next meeting, but I just, as a little preview, just that we're very focused on repaying the use of one-time funds that we talked about. And there's a few big capital items that will be important to accomplish.
All right, I'm looking forward to that. Could you give us an update between you and Biz on, I know you've been having department meetings. Where do they stand? Have they been concluded? When do you think we're going to get we'll call it version 2 or 3 of what the budget looks like, where we start to get closer to reality?
Sure. So maybe I'll start and then I'll have Biz share her screen in a minute. So we have done all of our budget meetings with all the department heads. And now those numbers, are factored into our preliminary budget. We just receive the governor's budget like everyone else. So we got our preliminary cherry sheet numbers. So Biz can share her screen in a minute and show you just the big picture, which is, updated revenues factored in. So as you know, the revenues are updated as best they can now. She calculated the 70-30 split, the revenue sharing with the schools. So we have a solid number for the schools. And then the net bottom line on the town side is still a deficit for us, but it's less of a deficit than we had before. So Biz can share her screen in a moment, but basically so I've completed all those meetings with department heads. I have all their requests, but I'm going to have to make a lot of cuts to be able to get down to balance the budget. And I plan on doing that and having additional discussions with those department heads between now and your next meeting, depending on when your next meeting is. So maybe with that, Biz, do you want to just share your screen and show the summary?
Yes, Doug just mentioned cuts, but I'm just going to clarify. I'm sure he will as we go along. These aren't cuts. Everybody was allowed to put in their wish list. What do I want? I want everything in the world. So this budget is based on everything in the world. So a lot of departments did put in for a lot of items. So now we have to go back and say, hey, you wanted 5 people, we can only give you 2. So that's kind of where that aspect is going.
That's a good point, Biz. Yeah, thank you for clarifying that. It's a cut from their request. We're not talking about year-to-year reductions. That's a good point.
Yeah.
One of the revenues that's different, obviously, is the marijuana revenue. I just a sidelight, because it's new to the equation. Is that still part of the 70-30 split?
No.
No, it never was.
Specific. I'll bring up the 70-30 split before we go too far so you can see where those revenues are. Is that what you would like me to do? Would you like to speak to this first?
No, it's something we can come back to and dig into a little bit, but if it's not considered part of the split and the school is fully aware of that, then it's really kind of a non-issue. I'm always diving into, you don't want to get like sideswiped with hey, by the way, we noticed the revenue's up and we want, here's what we're going to do with our share of it.
Let me just say this before Biz, and this speaks to your point, John. We've gone over all these numbers with the school department, and as you'll see in a moment, the school department is extremely happy with our formula, the way it's working out right now. So there's no issue there. So
Correct.
You'll see in a moment.
Okay, so we just got this screen so we might actually be able to see it. 1 second. Going the wrong way. Okay. So this is our budget. And as you see here, it's the operating budgets, etc. If we just get down to brass tacks, which is the most important part here. My screen is stuck. Here we go. The deficit that we're looking at is $668,000. But that deficit includes a lot of variables here. The revenue aspect, we did pretty good on the revenue aspect. The levy limit is 38. We do have debt exclusions that are up. I had spoken about earlier on the revenue side, the amortization and debt schedule. So this is money we'll be taking from the amortization fund balance in 23. So that gives us taxation of 44. This is probably the best increase that we've seen in a number of years. Our cherry sheet revenue went from 18.2 to 20 million one. So that's pretty much a 1.9 increase, which is tremendous for the town of Rockland. It couldn't be any better. Our local receipts also went up based on current analysis of room tax, meals tax, the cannabis, some other variables that are in there, the new rates calculation for the trash, etc. So that's where a lot of those revenues come from. So again, this is where the significant change comes into play. Education right here. This is a gigantic boost for the school department. They had asked for less money than we're proposing. We're proposing 28,355,000. They had requested just over 27 million, but based on the formulas, we were able to give them roughly $669,000 more than what they had requested. And we did go over these figures with the school department on Tuesday, just to let them know what we were looking at. We feel as though they were pleased with the outcome. They know there may be some variables that may still come into play here, as we know the budgets. We don't have true budget figures until the final budgets, which hopefully we'll have before July this year. We're hopeful that the Senate Ways and Means and the Conference Committee will give us a little bit more money, which would be helpful. But we're working off the governor's budget. So as long as there's no dramatic changes, this is pretty good for the school department. One of the other big things that we're looking at is the health insurance. Our health insurance this year is going up 4.5%. If we recall last year, there was no increase to the health insurance. We did have turnbacks last year on the health insurance, but that's because we were anticipating all the COVID hires that we had to do through the school department would have to take health insurance. So we did budget a little bit high on that, but right now our insurance budget is in a pretty good place. It's lower than it was last year. So these are the main factors that have come into play here.
Was
And-
the net of that is that less people are taking advantage, even though the price went up, you're looking at, you're foreseeing less participation in 23?
No, we had anticipated higher participation in 22 in order for the school to maintain their remote learning academy, et cetera. Those needs did not come to fruition. So therefore, that's why we felt comfortable taking the actual health insurance people that we have right now on health insurance, the plans that they're in, and providing a contingency of roughly 5% to cover any additions and changes to the health insurance. So
So
that's where the big variable comes in.
So we budgeted for 12,769 in FY 22. Do you
Well,
have
that's-
any idea? Do you
that's
do you
full
have any idea
benefits,
what
Sean?
actually came in?
Hold on. 1 second. You're looking at the full benefits at the 12. So group insurance, we actually spent
So you
734.
budgeted 8, you came in at 7.
Right, and we had estimated in 22, 8,015,000. Based on our actual counts right now, we feel that the 7,400,000 will suffice for what the town needs. Okay, do you see that there?
Yeah.
Okay. All right, so those are the biggest changes. Another thing we're looking at is the property liability insurance. We're waiting for final figures on that. That may fluctuate, but not a heck of a lot. And we do have an OPEB in here for 75,000. As Mr. Lapp said, there's a number of things to continue to make modifications. And he is confident that the 668,000 will be gone by the time of your next meeting. And that each department will be fully vetted and in agreement with what the budgets will be.
Do we have any idea at all? I mean, I know this is real time almost, but on snow and ice, do we have any idea what snow and ice is going to hit us for? I mean, because I think last year, I'm not even sure we spent $1 million, and I can't imagine this year we don't spend, with this last storm alone, I feel like we're going to be higher than last year, but.
Well, one of the things in this budget that we have been talking about was increasing the snow and ice from 150 to 300,000. Again, this is one of the things that Mr. Lapp's going to have to address going forward, whether or not that needs to be adjusted up, down, or in between. As of today, This storm is estimated to have cost the town $350,000 for this storm.
Yeah.
And I'm estimating, you know how you normally fulfill your deficit via free cash? I'm estimating that we're supposed to get another storm on Friday. Don't know how big it's going to be. We're in January, you have 2 more snow months to go. Just for a placeholder, we've talked about putting 600,000 into free cash to cover the snow and ice deficit that may have to change. Okay, but for every inch costs roughly $10,000 for the removal, and then you have cleanup after that. And that was per my conversation, and I believe Doug may have had the same conversation with Dave Taylor today. So, yeah, snow and ice is a problem. But thankfully, you have some money to help address that problem. But budgeting more appropriately in the future is something that the town's going to have to seriously think about, in my opinion. Okay, so that's that. And like we said, this has some tweaks that are going to have to happen. One of the things that probably will not change or will change minimally will be the split. So for those of you who don't know about the split, the town of Rockland has an agreement with the school department that certain revenues will be split 70-30. So this is our recommendation for the tax increase, and this is based on Prop 2.5, new growth and all that good stuff. So we're anticipating a regular tax increase of 1.1 that can be split between the two. New growth at 29,000, Proposition 2.5 at 29,000. New growth based on the recommendation of the assessor will not be going up at the 200,000 because it's such a variable. You never know what's going to happen. State aid, I had mentioned earlier that we went up 1.9, and this is the result of it, the 1.9. Excise tax here, this is strictly motor vehicle excise. It's important to note that in 2021, we collected $2,604,000. So we only collected $4,000 above what we budgeted, which is extremely tight. So for this purpose, it's recommended that you leave the motor vehicle excise stagnant because purchase of new cars is difficult right now. And the cars that are being purchased are used cars. So you don't have the same level of taxation and income that could be coming in. So leaving it 2.6 is the smart thing to do. This was also discussed with the collector, and we were in agreement that this would be the prudent thing to do on that. Payment in lieu of taxes, that's standard, and that doesn't change. Last year, we only collected 18,000. We collected the other 2,000 in 22. So 20,000 is pretty standard. The town may want to consider, I don't think we're going to have too much more in payment in lieu. So you may want to consider just taking that out of the schedule because it's not going to change. And for those of you who see my finger on that screen, this is the shared expenses. Our retirement contribution went up. Every time someone retires, we have to pay out more. Okay, and the employment population, not just for the town of Rockland, but other communities, the people who've been around for 30 years and now retiring, so that has an impact. The health insurance, as we discussed earlier, from 22 to 23 is a net reduction of 613,000. Medicare is going up, and that's based on certain projections that we have to take into play. All the grants that we have has to take into play on the Medicare, which is 1.45% of your total payroll, not just budgeted payroll. Liability insurance, we are looking at that. That may come down a little bit, but not a significant amount. State and county assessments. The state gives you the money and they take away the money. So that went up by 393,000. Interest and maturity or principal on regular non-excluded debt. Our regular debt is starting to go down, so that's a reduction of 46,000. So we have 3 million available in revenue, less than 169 net shared expenses. Leaves 2,881,000 for a shared split. So school benefits to the value of 2,016,000. Town will benefit to the value of 864,000. So that is why the school is getting such a big bump in their budget. And as discussed with the school department Tuesday, how much of this money from the state is based on Student Opportunity Act funding as well? So that's just a caution as we go forward. Because we know previous year, we only got the 18.2, we were expecting an extra 800,000. It didn't come to fruition because we were off by our Student Opportunities Act count by like 2 people. So we got less money. So that's one of the things you just want to always keep on your radar as far as Student Opportunity Act and the impacts it could have in the future. So that's pretty much the budget in a nutshell. Sorry if I babbled. And I'll turn it back to Doug.
Yeah, I mean, that's basically it. Thank you, Biz. Your upcoming meeting, I'll present you with a balanced budget, and we'll have more detail about what we're able to accomplish and what we'll have to, defer to future years. But it's compared to the last year that we had, it's certainly going to be a better year financially for sure.
All right, any questions on the budget as it sits? One thing I would just say is, do we have any detail on this that can be shared at this point? With anything you've shared in general, everything from the free cash certification calculation as well as the current budget?
The current budget, I'll defer to the town administrator.
John,
Once he has
are you
everything done.
asking, I'm sorry, Biz. John, are you asking about what she was showing on the screen, or if you're asking if there's additional information in addition to what she showed you on the screen?
Well, I know that this general government, for example, is a roll up of several departments. So we have that departmental look yet available, even in its unbalanced form. So we can kind of get underneath a little bit of where within those larger levels is everything coming from? You know what I mean?
Right. Well, I guess what I was planning was to present you with a detailed, line item budget for each department for your next meeting. That was my plan.
All right. So we're gonna
This is out of balance. Yeah.
Okay. All right. So we'll get that at the next meeting. That's fine. The free cash certification is probably something, if we had a copy of that, that would be good for us to kind of go through and go over, because we did go over it fast. I feel like I understood it. I know where the big numbers are. And I always, the little stuff, and you mentioned a couple of times, this is nothing, this is nothing. The big stuff, I may have more questions after I study it a little bit to say, better understand where it came from. That's something we definitely should do our very best to understand as well as we can, and ask whatever questions come out of that. But all in all, it's shaping up to be a good budget season from the perspective of we have this revenue available, we have coming in for the following, but the following fiscal year, and we have a decent free cash amount. So interested to see what we're going to do with that money as we go forward. All right. Any other questions on the budget as it sits today? Okay. Doug, or I assume, Doug, this is going to come from you. Can you go over with us at least what the preliminary plan is for Biz's departure, and kind of how we're going to kind of plug the holes in the boat to keep us going down getting the things done.
Definitely, we're not going to sink. That's for sure. So that's part of why our Assistant Town Accountant, Serena Amaral, is on this meeting tonight. Hopefully, she'll be able to participate in future meetings with us. And Serena's an outstanding employee, and we have a lot of confidence in her. And I want to just thank her in advance for everything she does and her stepping up in Biz's absence. In addition, we're going to hire a part-time consultant. I think someone you guys have dealt with in the past, Eric Kinscherf. We're going to be meeting with him later this week. Biz and I will be meeting with him to go over the plan. It will be part-time, obviously, and then we're going to work out exactly, how much time is needed. So that will be kind of the short-term plan, is a combination of Serena, also Megan in the office, and Eric. Biz is all, Biz will be gone. Her last day working is Friday the 11th. She has offered to help us out on her own time, as might be needed to assist with questions. But I want to be really careful with that, because I know that she's going to be very busy with a brand new job in another town, and they have their own finance committee, and she has a family and a life and all that. So I appreciate her offer, and we'll try to be careful with that, because I want to be realistic. And then lastly, last night the Board of Selectmen did delegate the first part of the search process to hire Biz's replacement to me. So I'm going to work with the HR director and the assistant town administrator, and we're going to pull together some other staff and some other local officials. We're going to finalize the job description, put the ads out, start receiving resumes. We'll do some initial screening, do some initial interviews, and then we'll narrow it down to a short list of a few finalists, and then present those to the Board of Selectmen, and they can have those final interviews in open session and make the final call. But rather than immediately going out to a consultant, we're going to try to see if we can have success doing the process in-house. And if we can't, because it is a very difficult position to fill, it's obviously highly technical, as tonight's meeting shows, and there's not a lot of people that are qualified to do this type of work. So it could be tough, but hopefully we'll be able to attract a good qualified candidate. So that's basically the plan, John.
I think that depending on how much the money costs to bring in any consultant help, I think it's money well spent, because if we zig when we should have zagged with some of this stuff as we submit our final budgets and go to town meeting, et cetera, it's very easy to kind of miss out, and any money that you would have saved by not hiring a consultant can get chewed up pretty good. So that's just my 2 cents on that. I think there's an opportunity there if the town needs help to go fast and cast a broader net and find a better candidate, then it's money well spent. One question I had in my previous meetings with Eric is that very nice gentleman, did a lot to, he was very, when we get on the phone, it seemed like we accomplished things, we got answers. But sometimes there was a delay in communication and answers and things like that. And, I think I want to know what the communication plan should be. If we have questions, and you don't have to have an answer for me tonight, but if we have questions, should we filter those through you, Doug, through Serena, or do we go directly to Eric? Because Eric, I seemed like he was talking to the town on almost a daily basis, but then he'd circle back to me, with the finance committee questions that we might have. Maybe those came, a little bit later, a little bit more delayed.
How about this, John? We're going to be meeting with Eric on Friday. So let's, we'll discuss that, and then I'll make sure to fill you in at your next meeting on what the plan will be. But that's a fair question, and we'll have an answer for it.
Yeah, we're totally on board with whatever is most efficient for him and works for the town. I think the second time around will be a little bit smoother with that too. But again, great guy, and we enjoyed working with him. Okay. I don't think there's anything else from the town perspective to cover. Was there anything else you guys wanted to cover? Was there any, requests from the reserve fund or anything like that?
I don't think so. Biz, did you have anything?
Not at this time.
Are we anticipating anything, Biz?
As of today, nothing has been brought, well, no, yes. We may need some money into the treasurer's office to help with education and training. We have Allison doing an extensive training course, which is via Suffolk University. It's a broad course that touches on everything she needs to know about municipal government and finance. So she may need a little bit of money for that. It's remote. It starts up in the next couple of weeks. I think this would be probably one of the better classes that Allison could take at this point in time. So there may be a transfer. I'll talk to Allison and Serena about that by the end of the week. And if we feel as though there's a transfer necessary, we will certainly put it in for you. The accounting department should be fine. I have not heard anything from anybody where they need additional funding.
So liaison meetings, Doug, I know some of these and Biz, some of these have already gone on. I know Lori has some notes from meetings that she had. We're probably at this point, I feel like we're farther enough along. They've already met with you. You've had some preliminary conversations. We're going to reach out, to these folks because we've got to start to get these things scheduled in for future meetings to have them come and present their budgets. So again, they're going to be very quick conversations in many cases, especially if there's not a lot of movement in their budget that's planned, but it's really just kind of talking about the deltas, what's changing year over year, salary that's contractual and things like that. Those are quick items, but if there's a big item that they want to talk about, that they have 10, 15 minutes to kind of, talk about it with us. We can come back with a couple of questions that might be appropriate, and then they can be prepared before they come in front of the finance committee. At least they've had a chance to have an open discussion before that. So we're going to get moving forward with that. And that's our plan, unless you feel any different.
Sounds good.
Okay, all right. So that's the liaison plan. We'll go through and get some specifics and some dates. I know, Julie, we have a pretty extensive list of who's assigned to what. But we'll just get some updates from folks if they've had any luck since then. Now, Lori, you had some liaison meetings. Let me
Yep.
pull those up.
Okay.
Did you send those to my personal email address?
I think I sent it through FinCom.
Okay, hang on. It would help if I was in here we are.
Yeah.
Water.
Yeah, it's library, highway, and water. That's who I spoke with.
Is that a PDF?
I think so.
That's like, let's see. Okay. All right, let's try this again. Okay. You're not supported file type. Okay. All right. Would it be a Word document, maybe?
It's a Word document.
It is a Word document.
It is a Word document. Yeah.
Let's try Word. Hey, yeah. All right, I have the meeting notes up. I'll just share my screen, and pretty short and to the point, concise. Can walk through a little bit of that. If you guys someone confirm they can see my screen?
I can see it.
All right. All right, so Lori, if you want to take away, kind of roll through what you come up with on, library and the others.
Yeah. Well, the library just wants some pretty simple things. This is the second year they've requested a full-time library technician. because they have got a constant turnaround for their part-timers who train with Liz and then leave to another library to accept a full-time position. So she's a little frustrated with that. She envisions a full-time library assistant salary being $38. So, and technology, she would like to, actually got a grant to provide laptops that people can check out of the library to use for, I don't know how long. But she's asking for $3,000 to provide data plans for these borrowed laptops. And then programming, like the music programs they have in front of the library and at the farmer's market and other lectures of public interest. She's asking for $3,000 to be able to accommodate for that. And that's about it for Liz at the library. She has no article to submit. So
in her budget is contractual increases, standard adjustments that they have year over year. And then there's these 3 requests that she's trying to make
right.
relative to that. I do know on the technology side, if you're trying to get wireless access, there are a lot of, I know that she got a grant for the money to buy the laptops. That's what it sounds like. There is availability, or there was availability for money from the government for, for wireless access for the laptops as well. So there may be some money, used to be called E-rate money. I think that the program may have changed, but maybe an opportunity for her to get that covered by the program as well, because it's all part of when you look at your telephone bills, there's a million little taxes, and one of them is specifically for providing internet coverage in other parts of the country that may not have it, or low income, or whatever it is. So all right, and then this programming they want to do now. The library has a correct me if I'm wrong, but they do have a what do they call that? They have some sort of a fund there. It's a donation fund that they have that people have donated to the library. They have a foundation or whatever it is.
The Friends of the
Yeah, I mean, they basically have money that's been donated to the library or pledged to the library. Sometimes it's very specific, like it's designed, I'm going to pledge $50,000 for, large print books to be purchased. And there's only so many of those you can buy. But sometimes there may be other things along those lines. So where's the library foundation? Because the library has its own little committee to it.
John, if I may, the library does have its own fund. It has roughly $122,000 in it. They're very guided with how they spend that money. Additionally, they still have state aid money that they can use for various issues.
You could say that again. They usually don't like to use that money.
I know.
They're very tight when it comes to that special fund they have.
Yeah, and
exactly.
They shouldn't be using that fund to paint the walls and fix the bathrooms. It's a public building. But it seems like number 3, the programming, like it seems like it's right up the alley of what they should be using that stuff for. So
I assume they're consulting with Gino on the computer stuff too, the technology and programming.
Yeah, again, working in the wireless industry for a while, you'd be surprised, a lot of, there's a lot of different, there's so many programs at the government. No one knows about all the stuff that's available. So occasionally there's money available and people are not aware of it. So maybe an opportunity there. All right, any questions on the library for Lori? Lori, did the library, and Biz, maybe you could chime in on this. The library over the years has had a couple of articles for, different repairs and projects that they're doing. Do they have any open articles that that they've not spent all the money? And if that's the case, you know, do we have a status on that?
No, every single year, all articles are vetted to see where they are in process. The town of Rockland has a 3-year sunset clause in their town charter. Before any articles get closed out, we make sure that they don't have anything else related to that project. And just for sake of argument, they spend every penny and then some. So there is no money in articles, and that would have to go into turnback. You can't, it would have to be revoted for a specific use. So they really don't have anything out there for, to reallocate.
So the library does not have any open articles with money they haven't spent.
No, all of their money that they have available is accounted for to be spent. So there's no turnbacks on their articles at all.
Okay.
No available funding.
All right, let's talk about Dave over at Highway.
Yeah.
Dave has so many titles, it's crazy.
Yeah. The most important thing he wants to do is to get his fuel management system redone. They get a discounted rate on gas for all of the town trucks. And the containers that this gas is put into are really archaic and they're disintegrating essentially. So it's a multi-department request where a 10,000 gallon tank will replace the current one, split into 70% gasoline, 30% diesel. And the fueling has to have a canopy installed with a compliant fuel fire retardant system, as well as a concrete pad installed, and the road repaved. So the total cost for all this is $750,000. The second article is a 6-wheeler dump truck to replace the current one, which is from 1990. It's on its last leg. The one he wants is a 25,900 gross volume weight. It's a 10-foot dump body, a sander unit, and a snowplow. And historically, he said they haven't replaced their equipment. And he typically goes for smaller GVW vehicles, but he wants, you know, he would like to have, it's on his second on his wish list is this truck for 95,000. Let's see, the third. Huh?
Excuse me 1 second, Lori. Joe, do you know if these are on the capital plan?
Yeah, we did meet with them and we've discussed these and we've added them.
Okay.
Yeah, I think that truck is it's still under enough. The weight's low enough so it doesn't require a CDL. So I think he can. I think he can bring anybody in to drive it.
Yep. Okay. So yeah, so there's a Beach Street, Spring Street Road project continuation. They've already started it. Everything has been replaced. I can't remember. I'm sorry offhand why he put an article up about that. Maybe Biz, you can speak to that. And then there's a Topping Road or Topping Avenue Bowen Road project
Well,
that he'd like to do. Yeah.
I think it's important to note that a lot of these projects are under consideration for the free cash allocations, use of free cash as part of the capital project. So this is, you will find most of these requests are addressed in that fashion. Not all of them, but quite a few. And like Doug said, there's an awful lot, the fuel system, that's a priority. So we've given priority funding access to things that are of value to each department and to the town and whole in general. And Doug was gonna discuss the capital plan or the use of free cash at the next meeting. Is that correct, Doug?
Yes.
Okay.
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 Yeah, and he also told me that he's hoping to get a grant from MassDOT for 12 million.
Dave?
Yeah. And he's already spent like 50,000 in engineering to prepare for this. So it looks really good with the state. Like we're, we have a head start on the project. It's drainage and maintenance, and installation of 3 culverts, and Chapter 90 grants are being applied for. And he's hoping for federal infrastructure money as well, for a Topping Avenue Bowen Road project to reclaim the road, regrade, pave and micro surface as a top coat. He said total cost is 186,000, but I think he's looking at that big MassDOT grant to cover a lot of other stuff in the future as well that he is looking at. Like, let's see, there's the Goddard Avenue curb project. Existing curbs will be removed, not moved, and they'll add new curbs. It's 32,000. Roof repairs on heated building at the highway department, which is 32,000, and a service body truck to replace a 1995 S1 truck that they have, with a fuel distribution system installed for remote fueling to meet fire compliancy codes, for 75,000. So,
one of the things that, and it looks like that Topping Ave Bowen project is covered in here a little bit, but every
Mhm.
year Dave comes in and talks about storm drains.
yeah,
And the requirements up for storm drains, and a lot of federal and state kind of, pressure that's being put on to
Right.
fix these issues. So, I'm a little bit curious as to, I don't know if he just didn't cover it as part of highway, or if he was covering it in the storm drain budget, or he has enough or whatever. But again, this Topping Ave, this $12 million grant from Mass DOT, maybe that's where he's going to get a lot of storm drain stuff covered. But that's something he's talked about as a real big issue, and it would be nice to get some of these issues off our plate.
Hey, John.
With some investment.
I mean, I don't have my notes in front of me from the capital planning meeting last week that we had Dave on, and for some reason, I don't recall anything. Scroll back down on that. Can you scroll back down, John? On the Top Ave and the Bowden Road project, for some reason, I don't recall him submitting something to capital planning on that. The 186 or the 50.
Oh, okay.
So
Right,
that's
so-
something to just double check. But I'm looking below at the other items, and those are on there. We did discuss those and put them on the plan.
So something to follow up on. I'd like to, if you do talk to him between now and the time he presents, Lori, would be, we'd love to hear more about storm drain. What are some of the challenges the town's facing? And
Okay.
are there plans in place to start to rectify some of that? Because, there's a lot of things that are nice to have, but the things that are need to have are, if you don't get it done, you're not going to be in compliance. You're going to end up with fines or whatever. So like to know more about that part of it.
Yep.
And then for water,
Yeah, I'm actually meeting with Dave on Monday, so I'll ask him that about the compliance versus, okay. Let's see. Joe Lapointe wants to raise, appropriate, or borrow 12 million for treatment plant upgrades and PFAS removal. There's no guarantee, but Rockland, he thinks, is on the top 30 list of municipalities to be able to borrow from the state revolving fund at 0 to 2% interest. Joe thinks the possibility looks good. He plans to pursue grants nonetheless. To meet DEP mandates and to bring PFAS numbers into a safe zone. 6 GAC filters, which are granulated activated charcoal filters, are needed, which brings the PFAS numbers close to 0. These things are huge, and to accommodate them, he's going to need to build an addition onto the Hingham Street facility. This plus the purchase and hookup of the filters of both the Hingham Street and Myers Avenue facilities will require $20 to $25 million loan. And it's split between Rockland and Abington. To repay a 20-year note at 2% interest, it'll be $730,000 a year, and at 0% at $600,000 a year. And he thinks this will likely result in a tax hike for residents. And considering everybody's concern about the water, I don't know the residents would mind that, but that's just my opinion. But anyway, and other expenditures covered by the water department reserve, that he'll nonetheless be listed, he'll list them as articles, are cross connections or backhoe devices, meter replacement, backhoe lease, all the stuff listed on the bottom. Sludge removal, existing PFAS filter, carbon replacement, firewall upgrades, capital stabilization fund. It all adds up to $582,000. So
Biz said that I thought Biz, you might have said that it was $1 million they were expecting for have it as a surplus.
Correct. They have approximately $1 million. I believe Joe, I'm not sure when you talked to Joe, but there might be some more articles in there or.
okay, it was a couple weeks ago.
How long ago? A couple weeks
Ago, yeah.
Okay, yeah, I think there's been some changes there, but again,
Okay.
this will show up on the capital project requests, and most of these things are 50-50 with the town of Abington, so.
Yeah.
Lori, is the 12 million treatment plant upgrade in addition to the 20 to $25 million loan for the filters and the addition?
I believe so.
Okay.
No, that the total project clarification
Oh,
is
is
approximately
25.
25 million, which is a
Okay.
split 50-50 between the two communities. I believe there'll be an article going in at the either special or annual town meeting
Mhm.
to address this. It's being worked on in process right now. We had spoken earlier about ARPA funding.
Mhm.
Some of the ARPA funding is going to be used to help with the design process on this, which is part of the project as well.
Yeah, I thought you were talking about the 12 million for Dave's.
That is the 12 million.
Is it?
It's,
Okay.
yeah,
Yeah.
yeah, it's split between the two.
Okay.
So the total project is roughly 25 at this point. And like I said, that plans to be addressed at the Springtown meetings.
Okay.
So, and I don't know if anybody has this math or if we can go back to Joe with it, but he mentioned, $600,000 a year for 20 years on a 20-year
Mhm.
note or 730. Does he have like a breakdown of what that looks like per resident, right? Or per $100,000 worth of value for your home. So in other words, if the idea is that, hey, this is a $100 a year, $50 a year, $20 a year, those numbers mean different things to different people. But I'd love to hear from a resident perspective, like what's the average resident home is, let's say 400,000, and then their average increase in bill for that would be X.
Right. Good idea.
Yeah,
I
it might
think
be.
the
That's the
important
way
thing
I would
is,
like to have at least be part of the record. What was that, Julie?
It's Biz. One of the important things here is the water treatment plant for the two communities. You're going to have very little choice but to upgrade the facilities. So you just want to bear that in mind as well. As to whether or not it's coming through taxation or whether or not it'll be coming through user fee, none of that's been determined yet, so just throwing that out there.
Yeah. Understood. All right, great information. Obviously, water is a hot topic.
Yes.
Yeah, I was out at the capital planning meeting about when they went over all these water articles and then, whoa.
Yeah.
Yeah.
It
All
would
right,
be
we
good
got,
to have the
obviously we have
breakdown.
to do something, so.
It would be good to have the breakdown not only of the, what it would cost in a tax increase, but what it would cost on the water bill itself.
Right.
Right, well, yeah, that's specifically, Julie, I think that's what I'm getting at, whether it's, you know, whether it's baked into property tax, which it probably wouldn't, it would just be baked into water rates. If it was a water rate increase, what could the average resident expect? So.
Yes.
All right, that's all great information. Thank you very much for that, Lori, I appreciate it.
Thanks, Laurie.
You're welcome. Oh, I
thank you.
also wanted to mention, tomorrow I'm putting in resignation papers for the finance committee in order to run for the selectmen's board. I just
Right.
wanted to tell you guys that I really adored working with you all, and hopefully maybe one day I'll come back and I'll, but we'll see.
No, that sounds great, Laurie. I'm glad you're doing that.
Good
Yeah.
luck, Laurie.
You're definitely more than welcome back.
Yeah, thanks. So,
Good luck, Lori.
Good luck, Lori.
thanks. Thank you very much.
An enormous commitment to make that kind of a commitment and dedication to the town. So I wish you
Yeah.
the best of luck, and in advance, if you're elected, I thank you, because it's a thankless job, but it is rewarding to see some of your fruits of your labor come to fruition. So
Well,
You
there's
got
some
that
really
right, John.
important things we need to, I think, address,
yeah,
and have honest talks about.
good,
So-
good. Well,
Yeah.
I appreciate it, and you've always been very helpful and good contributions here on the finance committee. We appreciate it.
Yeah, awesome.
All right.
I think he'd be an
anyone-
asset on the selectmen board. I mean, looking out for the residents' interests.
Yes, right. That's
So,
the,
did anyone else have any liaison meetings yet?
I have not yet. I didn't think, I think I'm on the Board of Health, right? Julie?
I don't have it all in front of me right
Go.
now. Julie's got that.
Board of Health, Public Health Nurse. That's it.
Yeah. No, I wasn't sure that Delhi was going to be ready yet. I have to give her, I'm going to give her a call.
Yeah.
So, I mean, I would think between now and next week, let's try and make some progress on that. I intend to call the different departments and book some time with them within the town hall, the ones that I committed to especially, to try and get some time with them. And then we need to start lining some of these folks up in order to hit our marks. So, Doug, what do you think is reasonable in terms of a department coming and reviewing their budget? When do you think, would a department be ready by next week, do you think? I mean, it could be an individual department, I suppose.
Yeah. Like a week from today, you're talking about?
I'm talking about if you said, hey, the clerk's office should be ready by the night. You know what I mean?
I think so. I think we can pull that off in a week. Yep.
Yeah. If you could just come back to me with, hey, here's a few departments that should be ready by the 9th. It could be 2, it could be 3, whatever it is. You can present your budget. We probably have them go first. They can present their budget. They can get off the call, and then you can go through the budget at large between you and Biz. That might be a good plan for next week, so we can at least start to make some progress.
That's fine. That's no problem at all. Yep.
Okay. So once I have that list, and I'm guessing some of those departments might be within the town hall itself. And if that's the case, I'm going to try and make some phone calls tomorrow to those department heads to try and book some time. And again, it's going to be 15, maybe 20-minute meetings where we just kind of go through. And again, we just hit the deltas. And I think the plan was it was going to be Kara and Megan. I was going to invite you, and then if you guys could make it, you'd attend, just so you can participate in the process and ask some questions and things like that. And you guys, you'll come with different perspectives, and I think that's really helpful to have you be part of the process. Okay. So that's my commitment, is to get that done tomorrow, and then hopefully have a lineup for departments for next week that I'll distribute an email as part of the agenda. Okay. All right. So that's it on liaison meetings. Everybody knows kind of what their charge is, and you have your departments that you're assigned to. Susan, I know you weren't really, I don't think you were assigned to anything yet. So you just need to get to the clerk's office and get your swearing in done, so that you can vote on things. And then, we can get you maybe to participate. I'll take a look at the list of departments, and there's probably one or two that only have one person on it, and you can join in with them to kind of, go through the department head meetings. Okay. All right. Other than that, I don't have anything else on the agenda. I don't want to keep us any longer than we need to be on this lovely Wednesday night. Does anybody else have anything else that they had questions on or wanted to bring up?
No, John, but I do have to tell you, I'm going to be away for the next 2 weeks.
Okay.
So Julie, I think you and I were going to be doing the schools, right?
Right. But I was waiting for them to know what they were going to have in their budget with the free cash thing.
Okay.
So,
Yeah. Usually the schools are handled later anyway.
right,
So I wouldn't get too concerned. They're usually like right towards the tail end, because it seems like they're making adjustments, not to the final hour, but they make adjustments later than some of the smaller departments.
yeah.
And I know
So-
I'm on the fire department with somebody too, and I don't remember if that's.
I'm on with you, Linda.
Okay. And are they later too usually, or?
And
No.
Denise has a question. That's a cool hand. What do you
Oh,
got there?
thank you. The school department will be presenting their budget to the school committee, and I believe that's on February 15th. So
Okay.
you might want to touch base with Jane Hackett
Mhm.
to see when they're presenting.
Okay.
And,
Which that's
Linda,
that's a public meeting you could attend, right?
Yeah, that's
Yes.
what I'm thinking.
Linda, do you have Jane Hackett's email address?
I do not.
Okay. So we'll make sure you get Jane's email address, okay? And you can, plan to attend that. If you could attend that meeting, that would be great.
Yeah.
And then, that may give you most of the notes that you need.
Right.
And, but feel free to schedule a call with you and Julie, maybe to follow up with Jane and the superintendent to, dig into maybe something that, you needed more information on.
Okay.
But they do a really good job of presenting their budget and giving you a lot of detail, which is good.
Great.
All right. Any other questions?
We
Okay,
have
Julie.
we have meeting minutes of December 8th that was sent out at the end of last meeting. Everybody get them?
I don't believe I did.
I didn't have a chance to look at them.
In a second. Julie.
Okay.
Julie, where did you send those to?
I sent them out through the FinCom.
Is it through December 8th?
Yeah, right, December 8th.
December 8th. Okay, I'm going to email that to everyone here, and I'm going to bring it up on my screen. So even if you don't get the email, you can just review it live. Okay. What would we do with those? All right, can someone verify they can see that?
Yep,
Yeah.
Yes.
Okay. All right, so with that, just check view. And then Zoom. Page width. Okay. Whoa, all right.
Better.
Okay, so Lori Child, Lori, you are out from voting on this one. Allison Sullivan was introduced. Preliminary budget. Motion was made on a storm damage.
it was a
The
transfer.
reserve fund transfer on that one. McCarthy Farm purchase and sale agreement was signed. Bill Stewart's on the capital planning board. I
No,
think
that's
that's
the wrong bill.
Bill
Bill,
Brinkley.
What was that?
It's Bill Principe.
It's Bill Principe and not Bill Stewart.
Oh, I'm sorry. Okay.
I'm not.
All right. All right.
I'll correct that before I send it to town hall.
Please, okay. And then here are all our liaison assignments, which is very helpful. Okay. All right, so with that, I'll entertain a motion to approve the minutes as amended.
I'll make a motion to approve the minutes as amended.
Second,
I have a motion and I have a second from, who was the second from?
me.
Linda?
Linda, all in
Mhm.
favor?
Aye.
Aye.
Liz, you can't vote even though you have that fancy hand.
Oh, let me take down my hand. Sorry.
All right.
All righty,
opposed,
all gone.
no one opposed. Okay. All right, so we've got the meeting minutes for December 8th that have been voted and accepted. All right, with that, if there's nothing further, I'll entertain a motion to adjourn the meeting.
So moved.
I'll second that.
I have a motion from Bill Stewart. I have a second from Joe Gambon. All in favor?
Aye.
Aye.
And meeting is adjourned. Thanks very much, everyone, and have a great evening.
Thanks, you too.
Bye, everyone.
Bye.
Night, stay safe.